What's up, fam? Theos here. I'm just gonna bring a little trade breakdown of the AM session because it seemed to be a little harder of an open than normal. So first things first is do want to draw the attention to the 5 minute and a higher time frame, and looking back to London session, because if we look to London session, which is 2, we could just look start 2 o'clock, right? No, it's 2:30, but 2 o'clock, and we could see what's the market showing us. Fair value gap on the 5 minute right here with a volume imbalance, which is that gap between the two bodies there at 3:50 a.m. and 3:55, the gap between those two bodies. So if we mark this as the FVG, okay, on the 5 minute basis, right? And look what the market left down here. Pre-market session, 620, right? Now you can see the move framed out. Yeah, it's hindsight, but the trade's already posted. I already posted the trade that I did take for the day, which I believe was like, the entry was somewhere right around here. Somewhere in here. Anyways, so there's this 5 minute fair value gap on the 1 minute basis, right? You see it? And then we know about time. Macro, close the ad, right? Macro, liquidity sweep. See? Because I don't have a liquidity sweep. Anyways, I'll just mark it buy side. So buy side taken, right? At macro. And then what does the market show us? Our entry model. Go watch the recap. This is marked out literally. It's on the screen. And notice how we couldn't even dig back to the inversion after ripping through it the first time. We can only draw back to this buy side. Market shift structure. We couldn't even draw back higher. See, we couldn't even wick. That's how weak we are. Right? We're so weak. Market wants to go somewhere. You could call this your target. You could call this your target. You could call that 5 minute fair value gap. Or I'll go one more step to show you on the hourly basis. Right? Extended trading hours. No wick low, 9 a.m. So that's a key indicator of a potential draw. And then you know we shifted, we broke fair value gap. Like, there's so many ways that you could frame out your trades. It's so fractal. And like, look, these were our targets up here. And this is from an hourly standpoint now. So if we come back, reset chart view, come back to open, that's that 5 minute fair value gap that I just took off. And this is that hourly fair value gap. Notice how it's accumulating down here. And then it reversed for afternoon. But anyways, back to the AM session. You know time. So your first entry isn't till 9:50, right? And what does the market give you presented? First present fair value gap. It gave you an option. Close that out. Right? It's generated liquidity here. This is generated liquidity. right? Look what the market did later. Made an imbalance at it. I think there's a volume imbalance right there too. See? And it couldn't even dig up there, which in the moment it's weak. Moving lower. And then there's your key entry. Inversion, fair value gap, reversal, afternoon session. Anyhow, back to AM session. I was literally in a Discord chat. I was texting somebody in the Discord when I was presented with the option to get that entry there. And once I missed the first entry, I was like, okay, I'm going to take 950, 1010. And I just didn't. I literally didn't. Which was an unfortunate case of events. I didn't feel comfortable taking it. I didn't like price action. It needed to clean up. This was not a clean option, in my opinion, to trade. It was an optimal trade. Like, you could have traded this. This was a beautiful position to take. Minimal to no drawdown. First percent fair value gap. That's a beautiful position. And then you could see regular trading hours on the new day open gap. We failed to go lower than the previous day settlement price low. This is the new day open gap low right here. See this? And then the new day open gap high. And you can see how we're just accumulating, generating its liquidity. And then 0 to 1, generating liquidity. And then you see the bodies failing to close below this low, the new day open gap low. That's a bullish signature right there in of itself. And need not to say about like looking left a little bit. The wicks are doing all the damage, generating the liquidity for later run. And then you could have targeted that on the 1 minute basis. This fair value gap you see right there. Right there. Into 10 o'clock, 11 o'clock, and then you're out of your position. And then you're done for the day. Or a second stage redelivery. Buy side liquidity. Let's see what happened. Accumulation. Accumulated all AM session. This is accumulation in my mind. This is nothing more than accumulation. It's accumulating its way to the 5 minute entry and the extended trading hours. There. See it? After taking on that 1 minute buy side and we failed to breach here. Line failed to breach. Put it to the right. Failing to breach. See the 5 minute bodies? And in the 1 minute doing exactly what we want to see. Accumulating at the higher area. Right before showing us our entry into our targets. And then I would just remove everything. I don't give a fuck. And here's a beautiful example of, I guess the terminology, standard deviation. I guess that's what this is called. So the wick. Did my Wi-Fi die? Hello? Wi-Fi? What's wrong with my Wi-Fi? I'm connected to my hotspot. Genuinely don't know what the fuck's wrong with my Wi-Fi right now. I'm trying to drop the fucking sauce right now. Alright, this should work now. I'm on my hotspot on my phone. So, this recent low wick 0.5 or 5.5 standard deviation. Gave us that reversal. Genuinely don't know what the fuck's going on here. There it is. Fuck. Like, Jesus. What's going on? But you can see now the volume imbalance at this price point from the recent swing with a new fair value gap here. Is that a volume imbalance? Yeah, that's volume imbalance between the bodies. See? And then this is a major fair value gap, right? Look at the key price points that it falls in. Notice the body action straight down into where other key price points, and look at what price is doing at it. Can't make it up. Can't make it up. A key inversion fair value gap right here. I honestly could have held the position longer, but I didn't. Notice, I mean, if I had 7 on here, -7, -7, put it in red. Failing to take -7, therefore signaling to you, hey buddy, careful there. ICT order block. Look at the bodies at the 50%. Look how they don't want to go lower. Excuse me. Presented with a fair value gap that turns inversion. Extend it out through time, space. Right. You see how this is formulating now? Breakaway gap. See it? And see how we're reaccumulating back up? Up and away. Right back to -1.5 on standard deviation. Which, now that we've cleared and we're showing signs of reversing higher, Fibonacci 0 to 1. Notice the bodies accumulating at the lower quadrant with a new fair value gap being respected, taking the liquidity here. Look at the key time of day, 150, 210, right back. There's your entry model again. You can see it. This is the buy side liquidity. Fair value gap inversion. Volume imbalance with this inversion. This could have been your entry right here. See how we failed to come back and trade into this volume imbalance that I'm marking out? This volume imbalance that we failed to wake to? That's showing a signature of very weak price. Price is weak. And then you could have targeted right here. See your target? Right there. Order block here. It's day. It's end of day. Look at the price action though. Look at the bodies and wicks. This is one of the most damaging days I've seen in a minute. Look at that. If you don't know what you're looking for, you're gonna get hurt. I promise you. That's the saddest reality of day trading. That people will get hurt. That's just the name of the game. So one more time. Run back over the open. Just mark this out real quick. The new day low. New day high. Accumulation. New day open gap. Failing to close below with a body of the new day open gap low. First present fair value gap signature of bullish because it is above the 50% of the new day open gap. See how it's above? That's a signature bullish in the moment. You could target here. One of the bros that I know took this trade. Big S as I refer to him. He took this trade here. And I took this trade here. 10.50, 11.10. So funny. He took one on the buy side of the curve. I took one on the sell side of the curve. So that's all this is. See, it's delineated now. I need to turn off extended. This is literally anyhow. Later.